Hi everyone, in this video we will be going over the steps to finding the profit after tax, and this is from Learning Cycle 3. So what is profit after tax? It can be calculated by subtracting the tax we owe from the taxable income that we make. But what exactly is taxable income? So taxable income is simply the income minus the items that we cannot tax. The items that are non-taxable include operating costs, depreciation expenses, and interest on loans. And so altogether, a taxable income can be calculated as the revenue minus operating expenses minus depreciation expenses minus interest on loan. But how can we determine the tax we owe? There's a tax table that we can look at to find our marginal tax rate, and we need to first calculate our taxable income to use the table. Our taxable income will fall into a range of values, and depending on the range we will owe a marginal tax rate, where from then we can calculate the tax owed. So let's look at an example for finding the profit after tax. We own a very small pizza shop, and last year we sold $400,000 worth of pizza and drinks. We also sold $50,000 worth of our t-shirts. Materials to make the pizza and run the shop cost $70,000. The labor cost was $100,000. We also spent $8,000 on insurance. Using this information, we want to find the profit after taxes. Step 1 is to finding the taxable income. So, as mentioned before, the taxable income is the revenue minus the cost of goods minus depreciation expenses minus interest on loans. So, our revenue would be the $400,000 from the pizza and drinks and $50,000 from shirts. And the cost of goods would be $70,000 minus $100,000 minus $8,000. In this example, we don't have any depreciation or interest on the loans. This brings our taxable income to $272,000. Step 2 would be finding the marginal tax rate. To do this, we look at our table for corporate income taxes, and we find that $272,000 falls in range 4, and we look at the tax rate, and it is 39%. So our marginal tax rate is 39%. Now we want to compute the amount of tax we owe, knowing the marginal tax rate of 39%. If we look back at the table, we see that the blue arrow is pointing to the tax computation, where X is the taxable income. We use this formula and plug in $272,000 for X and find that we owe $89,330 in taxes. The last step would be to calculate the profit after tax. So we know our profit after tax is the taxable income minus tax. We calculated the taxable income to be $272,000, and we calculated the tax to be $89,330. So to get the profit after tax, we simply subtract the tax we owe from the taxable income and find that our profit is $182,670.